Hi there, I'm verified champion trader Kevin Davey, and today we're going to talk about algo trading performance metrics. So let's get to it. Okay, so today I'm going to talk about 4 different things. First, I'm going to talk about averages with performance metrics. Things like average trade, average win, that kind of thing. Second, I'm going to give you some pitfalls, some things to watch out for along the way so that the performance numbers you come up with are good. Third, I'm going to give you, as part of this, some realistic results from strategies I actually trade. And then finally, I'm going to tell you how you can create some of these strategies yourself. So let's get to it. First off, remember, if you have questions and you don't want to put a comment in, I'd encourage you to comment first. But if you don't want to, just send me an email. And there's my email address. I answer all emails from students, non-students. Feel free to send me something. This is the typical performance report. This is TradeStation. Other platforms have a similar type performance report. I'm sure you've seen this before. Nothing new here. The problem with it, and with all of them, they give you lots of numbers, and not every number is meaningful. And the other big thing is a lot of times better numbers aren't necessarily better. They're better, yeah, they're better looking, but they don't help with real-time performance. And that's where people get hung up. They try to make perfect looking performance report, the perfect looking back test. And that's always a problem. So the numbers I'm going to show you here are strategies I actually trade, and they're only walk forward out of sample tests. That's a type of optimization, but it makes out of sample data, and it also includes real-time results. And this is for about 30 strategies I actually trade. And it's worth repeating that I'm not showing you optimized results. If they were optimized results, they'd look a heck of a lot better than they do. Can tell you that. Now, just a little test. Which one's better, A or B? Most people would say B, but the problem is you don't really know unless you know how the strategy is developed. Strategy A could have been like something made by a scammer who just optimized every variable and got this perfect looking equity curve. And strategy B might be real-time results. And in that case, B is a lot better, but maybe A is a lot better. You don't know. And that's why you got to watch out with these performance numbers. So here's the sample chart. Today I'm going to talk about average trade metrics, and if you look at the performance report, I'm going to focus in right there, the percent profitable and some of the average trade values. And I think you're going to find it really interesting. So let's first look at percent profitable, because people a lot of times are hung up on how much profit a strategy gives and how often, meaning, oh, I got to have at least 60% profitability or this isn't a good strategy. Well, here's 30 strategies that I'm trading. The median's around 49%. So half of my strategies are above 50% winning trades, and half of them are below that. And you can see I go as low as 28%. I have a strategy that wins 28% of the time. You might think that's crazy, but in a portfolio, hey, if the wins are much bigger than the losses, then that could be worth trading. I also have a couple strategies that are up around 90%. These are probably ones where you get in quickly, get a profit, and then get out. But there's a big range there. Half of my strategies are between the 25th and 75th percentile, 40% to 60%. And I think that's pretty typical of a lot of more trend type traders, which is what I do. I tend to stay in trades a little bit longer. And there's another video that I'll be doing on that. Over on the left, you can graphically see the scatter. Half the strategies are in that white box. It's called a box plot or a box and whiskers, a couple different names. But hey, if you have some statistician friends, just mention that you're doing some box plots and they'll be impressed because this is a pretty advanced technique for visualization. So that's percent profitable. Then if we look at the average trade, that's in dollars. It's also known as expectancy. A lot of people think you have to do this convoluted equation to get expectancy. You don't necessarily have to do that. It's just your average trade value. You can see most of mine are in the $150 to $700 range for average trade. I do have one, it probably doesn't trade that often, where the average win's $7,000. So I must be going for huge long-term trends there. I also have one that's down around 60. I try to keep them up because you have things like slippage and commission, and sometimes if you underestimate slippage, if you only had a $30 average trade, hey, if you underestimate slippage, it could take a lot of it away. These are all after slippage and commission though, but that gives you an idea of where my systems fall. And then if you look at winning trades, you can see the winners are bigger than the average. So 25th percentile is around $1,000, 75th percentile is around $3,000. So half my strategies try to average winners that are between 1 and 3,000. So you can tell I'm not a scalper. I've never had luck with that. And sure, I'd like to be in trades where I get more profit, maybe not as much, but I end up building strategies that work. And so I'll do whatever it takes as long as they're working. In this case, it's telling me $1,000 to $3,000 average wins. Those are pretty good. What about losses? Well, you'll see those are actually smaller. So it's backwards because it's a negative number, but about $700 to about $1,700 are half of my average trade for losers. That's where they fall. So you can see my average winners are bigger than my average losers, and I'll show that in a second. Some of you like to follow Van Tharp and calculate what I call the Tharp expectancy. Van Tharp, a number of years ago, he kind of confused everybody because he started calling expectancy the same thing as his expectancy number, the same thing as an average trade value, which it isn't. His expectancy is the average trade divided by the average loss. So you can think of it as how much do I have to risk to get a certain amount of profit. So if you have right at the median, for example, 0.3, that means you make 30 cents for every dollar you risk. Okay? And expectancies in the 0.2 to 0.5 range are usually pretty decent systems that you can do a lot with. I have one that's way up there. I suspect that's because there's not a lot of trades with it. You know, one of the things that a lot of people talk about is reward to risk. And they say things like, oh, you must have a reward to risk of 3 to 1 or 5 to 1. It's all BS. It doesn't matter what your reward to risk is except for a certain profitability, percent profitable. And what I mean by that is take a look at that red curve. That's your dividing line between profitable and unprofitable systems. So if you have, for example, a 30% winning percentage and a reward to risk of averaging of 1.5, you're in right where the point of the cursor is. You're in the non-profitable range. So you're not going to make money with this system. If you notice, all 30 of my strategies are on the right side of the curve. They are profitable. So for example, here's one with a 50% 0.5% winning percentage and a 1.5 reward to risk. It's profitable. So it's the same reward to risk that I just told you, but the difference is the winning percentage is higher, and that pushes it to be profitable. So you can have any reward to risk that you want as long as you're on the right side of the curve with the winning percentage. And I mean, I'm flabbergasted by the number of people that only look at reward to risk and completely ignore winning percentage. And then there's people who completely ignore reward to risk and only focus on winning percentage. So it works both ways. Both numbers are critical. And you can see it from this graph, depending where you lie. I highly encourage you to take the average win divided by your average loss of all your trades. That's your reward to risk, your average reward to risk. And plot it versus your winning percentage and see, are you on the right side? Well, hopefully you are. And then if we look at my systems for reward to risk, the median's around 1.7, and they fall somewhere 1.2 to 2.4, at least half of them in there. Again, those are real systems. Now, I've said this before in other performance metric videos, but the numbers alone are meaningless. If you build proper strategies and you build them the right way, then the numbers mean something. But if you don't, the numbers are garbage. So make sure that the numbers you look at, whether you're building your own system or looking at somebody else's, make sure you understand and you believe how they were built. Because there's a lot of people out there throwing out performance numbers and they're just optimized and they're garbage. A lot of people don't get that. How can you get good systems? Well, one way is my Strategy Factory workshop. I highly encourage you to check it out. Go to my website, kjtradingsystems.com. I do a live class every 7 weeks. This will get you on the road to building algo strategies the right way, where you can believe the performance numbers you see. Okay, well, hey, thanks for watching. If you have questions, of course, leave a comment. Subscribe to my channel. Give this a thumbs up if you like this. I'll keep making more of these videos. I'm Champion Trader Kevin Davey. Have a great day.